Hello traders, Mark P. Markets here. My name is Mark Principato and I'm a chartered market technician, and thank you for watching another video technical analysis exclusively here for FXEmpire. So in this session, I'm going to be going over gold in the form of XAU USD, the CFD version of gold, our recent swing trade in it, and what we're anticipating for the next couple of days into early next week. So with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so straight into it. First thing that you have to keep in mind is gold has been in a consolidation since April. It has not been making any progress in terms of higher highs, although it's tried a couple of times. As you can see, every time it's failed off of its range high, it's pulled back significantly, as low as what, 1670 on this low, and it pulled back at this low again over here. What is that, 1704? So it can still pull back into the middle of this range, and that's why I'm not a big fan of buying breakouts, because if they fake out, that's the kind of risk you're looking at, which is really unnecessary for something that's so strong. You might as well wait for a better price. Now, the concern here is the bearish pin bar. This is not to be confused with a trend reversal. It just means that, you may get bearish momentum over the next couple of days into early next week. Now, that's not good for breakout traders, because now you're possibly caught and you have to worry and hope that it doesn't pull back. If it retraces, that bearish momentum can take price back to this first support area, this old resistance, which is sort of near the high of that range, around 1740. And if it takes that out, you're looking at like the 1720s as another inflection point. Now, if price can pull back and provide such an opportunity, then all we will need is a setup, okay, like a pin bar or an inside bar, and we'd be happy to send out another swing trade idea to go long, in which case we would add another third to our position. Since we've exited 2/3, we only have 1/3 on now. We can let this position ride and see the outcome either way without worry, because again, we've locked in 2/3 of profit and we're in from a great price. So it gives you a lot more flexibility rather than buying the breakout and hoping for the best. Okay, now this bearish pin bar may become inactive if this high is taken out. Okay, if that's 1779, if that's cleared over the next day or two, then it's canceled out and you don't have to worry about it. 1800 is much more likely at that point. But as long as that bearish pin bar is in play, you have to watch for that retrace. Okay, and again, this is all about reward risk and waiting for high probability setups. This is not about chasing and trying to just grab something just because fundamentally it should go higher. Don't let fundamentals confuse you. Technicals are much more helpful when it comes to short-term timing especially. All right, so I'm going to leave you with that. If you have any questions, please feel free to reach out. You can check out my profile here on the site. Other than that, I want to thank you again for watching. Have a great day, and I'll talk to you next time. Thank you.